Hello, hello, hello. I am here today to show you how to get the best entries with the Breakout entry signals indicator. This is the MT4 version, and of course there is an MT5 version too. Now, this is what your chart is going to look like when you get signals. You are not going to get the standard arrows. For example, underneath this candle, normally if you got a buy, you would have an up arrow here. You don't get that. You get this curly arrow here. You also get a suggestion of your stop loss and a suggestion of your take profit. And I say suggestions because, of course, this is your trading. You can put them wherever you like. The stop loss is, as you can see, below structure here. Stop loss here is below structure here. That's why there's a suggestion for it. But of course, you do your trading yourself. So if you don't place an immediate order with an immediate arrow underneath here, what do you do? Well, what this arrow is suggesting is if price goes and you use just below the arrowhead here, if price comes back up to this price here, it is probably going to continue. Okay, and you can see that it does. And again, if price comes back up to here, it's going to continue, and it does. Now, so what you place is not a buy as soon as this comes in. You place, and this is how you do it, you place market execution is an immediate trade, a pending order, buy stop, or the opposite, you would place a sell stop. And what you do is, right, I'm going to place the trade here, just below this arrow here. I look to the right, see the price, 1.149. I'd enter that in there, 1.149. Put my stop loss in here at 1.14230. I'd put that in there, and I'd put the take profit in there. Choose the lot size, and then I would click place. I'm not going to do this because it's a live account. So that's how you would place a buy stop or sell stop order. Now, the next rule that I suggest that you use, unless you're an advanced trader, is if price continues to fall or increase if it's a sell, to the point where it would have hit the stop loss if the trade had been live, then you cancel the buy stop order. Unless you're an advanced trader. If you're an advanced trader, you can watch the price action here. As you can see, we come down, we get a nice wick rejection here, a little doji, and then a big engulfing. So that suggests, if you're familiar with price action, that suggests that it's going to carry on. So you might not have cancelled it if you are an advanced trader and you use that strategy. You could leave it and it would have gone on to a winner. Now, how do you test this for yourself then? Well, first of all, you download it from Marketplace. You then come to Strategy Tester, get into Indicator, and choose the indicator. I would suggest you leave it at 1-to-1. You put the times that you trade in here, and whether you want alerts. In Strategy Tester, the alerts don't work. And then you choose the pair that you trade on and the time frame that you trade on. I've got M15 here. Then you click Start, and the quickest way to do this is just to click Skip to. Now I'm just going to change the colors just because it makes it easier, and put candles and get rid of the grid. You can see this is whizzing through all the dates here, and it'll come to the end. There. Now you can see all the trades, and you can go back and have a look at them. It's much quicker than letting it run one by one. Now this is exactly what I did here, and you can see that it's the same. Let me just that's smaller. Just want to show you that it's the same there. So these two are the same, and the only reason I'm going to use this one, which I did earlier, Blue Peter style, is because I've been through the trades to check whether they would be triggered or not. Okay, so this one, as we've said, its price came down lower. We're going to use the beginner or intermediate traders rules, and would say we'd cancel that stop order, even though if you're advanced at 1-of-1. This one here, the stop loss does not get triggered. The price here comes up and triggers the trade here, and then it goes on to a winner there. So that's one win. And by the way, we're looking at just the last month, okay, from December November the 20th to December the 20th, which is today. Again, here, price comes in, triggers the trade here before the stop loss goes on to be a winner there and that one there. So that's 3 wins. Now here, price comes up. Okay, so it hits this what would have been the stop loss before it triggers the trade. So you would cancel that order. Again, if you were watching price action, you could have watched it here. See, there's a wick rejection, a big engulfing. So you might decide to keep that one open. You might not. Okay, but the rules say you don't. Okay, what we're using now. And again here, that one's not triggered. This one isn't triggered because the stop loss gets there. There's price goes through the stop loss. No price goes through the stop loss. No trade till we get to this one. Now, if you get 3 in rapid succession, I suggest you only choose one of them. And we'll choose the first one here, and we can see there that this is a loss. So that's 3 wins and 1 loss. That's 3-1. Here again, we get triggered here and here, and there's 2 more losses. So that's 3 wins, 3 losses. So 3 all. This one here is, don't know why that one's there, because that's not a trade. Sorry, that one isn't a trade because the stop loss gets triggered here. Well, it doesn't because the trade wasn't action, so we cancel the order. This one here, again, well, this one would have been cancelled if you traded it. This one comes in as a win, and that's 4-3. Not triggered, not triggered, not triggered, not triggered. And you can see that the reason that we've set this indicator up like this with the buy stop or sell stop orders is that if it was an ordinary indicator just saying buy now or sell now, there'd be lots of trades which don't win, and that's what happens with lots of other indicators. They don't wait for the price action, so that's why we are using this. I've forgotten what we're up to. I think it's 4-3. Okay, this one here. Now we'll just have a look at this one, because did this one get stopped out here? I mean, did price come down to where the stop loss was before it was triggered? You know what I mean? I don't think it quite does, but again, you could be watching the price action here. We've got a bullish engulfing candle here, so we're going to say that one stays. That's a 5-3. This one not triggered because it comes to the stop loss here. Not triggered. This one is triggered here. Let's have a look and see what happens to that one. So this one is triggered there, and it comes onto a win there. So that's what we're up to. Was it 6-3? 7-3. This one gets stopped out 7-4. That one isn't a trade. These two aren't trades. This one's a trade. That's a win 8-4. That's a win 9-4. And then this one here, it is a trade, isn't it? Yeah, because it gets triggered in there, but it loses there, so that's 9-5. So on just this 1 month, if you'd been risking 1% per trade, you would have made 4% profit with a 1-to-1 risk to reward ratio. However, you can see that if the risk to reward was, let's say, 1.5, you see all these jump up now, then these winning trades would have been, that one was a loser anyway, would have been even bigger. So you could have won another 50%, 1.5 over 1, so another 50%, so you could have won another 2%. So it would have been 6% on one pair during 1 month. Okay, so if you have any questions, please do let me know, and happy trading.